Welcome back. I'm Deirdre Bosa, and it is time for Tech Check. Today in focus, slowing growth at cloud companies, and today's case study comes from Elon Musk's cost-cutting campaign over at Twitter. Have a listen.
I think I need to stabilize the organization and just make sure it's in a financially healthy place, and that the product roadmap is clearly laid out.
But how much can you really slash while keeping the business running? Musk has been able to keep the lights on shore, but it has come at a huge cost to fundamentals. A 40% annual decline in revenue and earnings. That's according to the Journal. In terms of those cuts, first, it was headcount, of course. Then it was office space. Its Salesforce bill by some 75%. Now, reportedly, its cloud bill with Amazon Web Services. And AWS could be a new kind of test here because Amazon is also an advertiser on Twitter, and the information reports that Amazon has threatened to withhold payment for advertising it runs on Twitter because Twitter is refusing to pay its cloud bill. More broadly, though, this showdown is really highlighting the vulnerabilities at both of these companies. The slowdown at the cloud giants, Amazon, Microsoft, Google, that is already one of, if not the most important story in software this year. These models are consumption-based, so you only pay for what you use, and as it turns out, it's pretty easy for companies to cut their usage and their bills. Look at Amazon's cloud growth over the past 6 quarters. It has been hit very hard by that trend. The street is skeptical that it won't come down by even more. Twitter and Musk, they're only feeding that skepticism, suggesting that customers could also ask for cost breaks, something that Amazon CFO, he actually pitched on the last earnings call. Have a listen.
Our customers are looking for ways to save money, and we spend a lot of our time trying to help them do so. This customer focus is in our DNA and informs how we think about our customer relationships and how we will partner with them for the long term.
Sarah and Carl, in good times, that obsessive focus on the customer, that's, of course, a good thing. But in these softer economic times, that loyalty could get tested and comes at the expense of growth, as we have seen with Amazon and the other hyperscalers, by the way.
Yep, although we've been around long enough now, Dee, where we've been through a couple of these cycles, and when price cuts come to cloud and come to software, then you really start getting into severe market share battles, which can get bloody.
I think that's one of the key differences of this environment that we're currently in. A few years ago, when you saw these price wars between Google, Amazon, and Microsoft, it was about taking market share. Now it's a very different reason. You've got customers coming to them and asking for deals or cuts on their contracts or their consumption use. So this time, they may not actually be gaining market share. We're talking about some of the other smaller players, like in Oracle. They're just seeing their growth slow, and Amazon could be particularly vulnerable here because while it is the biggest of those 3 cloud giants that I mentioned, it is also now growing the slowest.
All right. As for these reports about them slowing construction on their HQ2 in Virginia, some local officials tried to downplay it and say we don't think they're really stopping anything. It's just more of a pause given the environment. What was your take on that?
I think that that's what they have to say. You also heard a similar line from the property developer on that project. You saw that huge share price, JBG Properties, last Friday when this was announced. And they're kind of walking back, and Amazon is as well, saying that they're pausing here and they're reconsidering. But as time goes on, and we know that Amazon has been underperforming by a huge amount, not just the S&P and the NASDAQ, but some of the other big tech names, is it going to have to do more? So it's fine for Amazon to say this now. They're looking at everything. This isn't the first thing that they're looking at in terms of HQ2. They're looking at property spaces in other areas of the country also. How far does it go? And they probably don't know because this is also connected to the cloud story we were talking about. This is the profit engine of the company. If it slows more than expected, they're going to have to look to cut costs in other places.